Welcome! Today I'm going to start by sharing some news articles with you. People always ask, how do I get more ahead financially? Some will say, how do I increase my income? While others will say, how do I stretch the dollars that I have? And both of them are right. But this first article is about the latter. We've been sharing with you the increase in interprovincial migration for several months now. And in this article, there's more data supporting this fact. And our team has personally helped a ton of people from out of town buy homes in Calgary, Alberta. Now, Alberta's relative housing affordability draws a lot of attention from those who live in expensive cities, but now can work remotely. Now, here's a big tip for you. During your mortgage approval phase, it's important for your job letter to say that your company is allowing you to work from home and from a different city like Calgary. And if you're thinking about making a move like this, please reach out to us at our email, and our in-house mortgage expert Felix Chan will be able to help you. From out-of-province buyers from Toronto and Vancouver, the perception is that Calgary's real estate market is on sale. This article mentions the RCA Affordability Index, and the cost of home ownership in Vancouver is about 78% of household income and 68% in Toronto. In contrast, Calgary, the cost of ownership is only 37% of household income. Now, there's a report by Oxford Economics, and it ranks Calgary as the 10th most affordable city in North America, whereas Toronto and Vancouver were one of the least affordable. Affordability is a leading driver for all of out-of-town buyers right now, and the city's relative affordability is due to the multi-year downturn in the oil and gas industry. Now we gotta check out this second article, which shares with us that oil prices are currently soaring along with other commodities, and it can provide a significant boost to Calgary's real estate, according to BMO senior economist Douglas Porter. Calgary real estate prices recently started climbing but still lag in national price growth, and the real estate prices historically have a positive correlation with oil prices. The oil industry is one of the biggest drivers of the local economy, representing almost 25% of Alberta's gross domestic product, or GDP. When we look at Calgary's MLS house price index, we saw an annual price growth of 11% in May, which is a substantial amount of growth. Despite the recent oil price boom, when compared to the national home price growth of 23% over the same period, prices in Calgary have yet to climb. Okay, last month we reported about the new mortgage stress test. This came into effect on June 1st, which affected the average Canadian home buying power. I'm here today to give you the Calgary Real Estate Market update for July 2021. Without further ado, let's get right into it. So welcome back to the channel. If you're new here, my name is Jasben Lai, a Calgary Realtor from the LiveInnerCity real estate team. And I'm here to answer for you the age-old question of, how is the real estate market right now? Alright, let's talk about sales first. June 2021 sales are up by 65.3%, or just over 2,900 sold homes when compared to last June. The sales are down compared to the month before, May 2021, by 2.34%. As you can see from this graph, this is a record high for June, and it indicates that the housing market is showing some signs of letting up. Now, if you check out this graph, which breaks down sales for each price range, all price ranges, with the exception of the under $100,000, saw increases, even in the high-end luxury market of the $1 million and beyond. Let's talk about inventory. Early in the spring, buyers did not have plenty of choices, but recent improvements in supply are providing more options for them. It is taking time for supply to catch up with the demand in the market. New listings in June totaled 4,135, which is the second highest ever recorded for June. Now, each property type had different inventory levels, so detached went down by 0.4%, semi-detached down by 7.6%, row townhouses were up by 14%, and apartments were up by 26%. Now, here are the key highlights. For detached homes, there were modest improvements in inventory levels, and strong sales have kept the detached market firmly in the seller's market condition. For semi-detached homes, with 592 units in inventory in June, levels have trended up from the start of the year. Price. Detached saw a 13% bump, row townhouses saw a 9% increase, Semi-detached was up by 11%, and apartments saw a 5% increase. Now the key highlights for price are row townhomes. In June, citywide row townhome prices totaled $299,300, which was 1% higher than May 2021 and 9% higher than last year's levels. Prices have increased across all districts. Now, if you're looking for a great townhouse, we have a new listing and you can check it out here, or we'll leave a link for you. Semi-detached. Persistent sellers market conditions have caused benchmark prices to trend up, reaching a $427,000 in June. The gains occurred across all districts. And did you know some of the best cash flowing investment properties are semi-detached? These are the ones that you can rent up and down. Do you want to learn more on how to get that sweet cash flow into your portfolio? Well, check out our other investment videos. We'll leave some links in the description below. Tightness in districts with less than 2 months of supply has also resulted in the highest year-over-year price gains. However, the inner city has not experienced the same tight conditions and is the only district where detached prices have yet to recover to previous highs. Here's the summary. Sales to new listing ratio was overall 70%, and for detached homes, it was 76%, for semi-detached 63%, for row townhouses 67%, and apartments were 59%. Remember, if the ratio is 100% or 1-to-1, this means that we are selling as much as we are putting out new listings. Months of supply. For detached, we saw 1.79, which is still a seller's market. For semi-detached, 2.44, row townhouses 2.68, and apartments remained a bit higher in a buyer's market at 4.44 months. Here are the key highlights. For detached homes with a sales to new listing ratio of 76% and months of supply of below 2 months, benchmark home prices continue to rise. The unadjusted detached benchmark price totaled $537,200 in June. That was 1% higher than last month and 13% higher than last year's levels. Now here's some special market advice about the condo market. We don't often talk about it, but here it is. Recent price gains have encouraged more people to sell their condos this year. This has caused new listings and overall inventories to increase relative to the previous year. Relative affordability has supported sales totals that have improved from the exceptionally low levels recorded over the previous 6 years. Strong sales brought months of supply down and was consistent with balanced market conditions. And this supported price recovery in the market. Prices have trended up over the first half of this year and have risen across all districts. The district that saw the most significant price gain was the West District. Still, prices remain nearly 50% below previous highs. Hopefully I was able to give you a good understanding of what is happening today in the Calgary real estate market. We are very grateful for every like, share, and subscription that you guys give us, so thank you for your continued support. Are you viewing this from another city? We'd love to hear where you're watching from, so put that in the comment section below. My name is Jasben Lai with the LiveInnerCity real estate team, helping you keep real estate simple. See you guys next time.